This is John Kaiser at the Metals Investor Forum in Vancouver, September 15th, 2017. I am sitting with Gwen Preston, and we are going to swap ideas about where we think this market is, where it's heading, what it needs for this junior resource space to really get going. Gwen, this morning you gave a talk. What was the gist of your talk to the audience here?
So I do believe, and we're on the same page on this, that we are in the early stages of a big market in metals. And I think there's quite a few reasons for that. One is the strength in metals broadly. Multi-metal rallies are always going to be way stronger than one that's just propelled by gold. And we have really good strength in zinc. We have very good strength in copper right now. So we do have that perspective building. That really helps. Then there's all the fundamental arguments for gold. Real rates are still basically zero in most of the world. Gold is a very cyclical beast. Most of that cyclicality starts with uncertainty. There is a lot of uncertainty in the world right now, whether you're talking about geopolitics, whether you're talking about economics. I could talk for a long time about this. I did for 20 minutes this morning. But what I conclude is that the gold market turned at the beginning of 2016. And for the first 7 months of that year, we had the gold price gaining very nicely, and we had gold stocks offering the normal, very good leverage to the gold price move. 3 to 5 times what gold was doing is what the gold stocks gave you. That leverage, credit for that goes to gold investors who were sort of ready and waiting and jumped right in as soon as the market turned. Then the market cooled off a bit, which is fine. In 2017, recently, we've obviously had another nice move in gold. We've gone up through 1,300, we've stayed up there decisively. The leverage has been lacking. I think the leverage is lacking because what we need is generalist investors, not just the gold ones, but the generalist investors to come into the market and get excited about gold. And they will, because it makes sense from a cyclical perspective, and because the US stock market, which has gone on this epic run, there's cracks showing, there's a lot more talk about that market breaking down. So the risk investing in the stock market, the US stock market now, I say it's like, you have a chance of falling out a 40th floor window. Whereas if you're investing in gold stocks that are still very cheap, your risk is like falling out the first floor window. So you might get a little hurt, but you can manage it. So I think that rotation will happen because I think that opportunity, that disparity in value is going to become more obvious. But in conversation before we started this, I think you made a good point too about another factor that could help people see that opportunity, could help bring generalist interest into the gold sector. So why don't you were talking about some of the discoveries and the potential that they can have.
Yeah, the class of companies I'm most interested in are the juniors. And gold is relevant to them, or at least where gold is headed, when they have an existing deposit that might become valuable at a higher gold price or become more valuable than it currently is, what's called the optionality trade. And that's what the last decade was really all about, feasibility demonstration work, expanding resources, finding out what it costs to mine them. I think the market has become tired of that particular trade, and we saw from April onwards very, very poor performance by both producers and the advanced gold companies. The space that I really like, the discovery exploration companies, they have not done as poorly. Companies like Osisko Mining are still hanging in there. They're doing their 400,000 meters of drilling. The crunch for them comes at the end of this year when we expect a resource estimate that significantly increases the gold ounces, but even more importantly, provides a convincing argument that the ounces hang together sufficiently so that they can be developed. But I think really the next stage in this emerging discovery exploration cycle focus, which is agnostic as far as the gold price trend is concerned, requires brand new discovery exploration. And one of your picks, GT Gold, is an example of old-fashioned field work, totally oblivious to what the price of gold or silver is. Glaciers have retreated. Prospectors have gone in there. They found an anomaly. It's been acquired. They do the geophysics. Lo and behold, yes, there are IP anomalies associated with it. They start drilling RC holes first to map it out. Where is it? Oh, it actually is here. Then they start drilling core holes. And they've done a fantastic job even showing us the mineralized portions of the holes that still have assays pending. So that they're really allowing an old-fashioned discovery to emerge with the audience. They can sit there, they can crunch the numbers, they can wonder, what is this hole going to be? And of course now they have a similar strike length zone, the North Saddle zone, where they've got a couple holes in 400 meters apart that are pending. The market doesn't care. People who are interested in this type of play don't care whether gold's going down $100 or up $100. I think the general interest investor we need to get back are those who care about discovery exploration, not that gold's going to go up and drag up the value of some 0.8 gram per ton deposit.
Yeah, for sure, and I agree. I think I often say that momentum in gold is self-fulfilling. So once it gets going, it feeds itself. And a big part of the reason for that is because investors have participated in these cycles before and have made a lot of money, or they've seen their friends participate and they neglected to do so and they wished forevermore that they had. So this idea of what gold cycles can do is very well established. Once it gets going and we have discoveries like GT, which is up 6-fold or 7-fold in a matter of months, we have discoveries like Novo Resources in Western Australia, which is up, 10-fold? I don't even know, in just a few months as well. Those stories, they spread because that's really exciting. What investor could ignore that kind of excitement? And so when you have that kind of story happening and that kind of excitement developing, I think that is a bit contagious, especially against a US market that has all these 40th floor risks in it because the valuations are so very high. So I think we're set up. I think we're set up with a strong metals foundation, a lot of strong fundamental reasons, but then we have these exciting discovery stories that are just, how can you not want to participate in that?
Now the Novo story is really important because, at the moment, I characterize it as a local freak show. They're getting these big nuggets in these conglomerate beds, they jackhammer away and peel out over this rock, and there's this gleaming finger-sized nugget. The size of the property which they have right now, where they're able, to do work, it maybe can host 5-10 million ounces, and if that's delivered, that's great. Novo ends up being worth where it is today, maybe a little higher. But that isn't really what this market needs. We have been in a discovery exploration bear market since 1997 when Bre-X turned into the great betrayal. And Bre-X was 80 million ounces, supposedly at its peak, 20 million, supposedly documented by the drill holes, and not just the arm waving in its final days. But even if we got a Voisey's Bay today, $4 billion buyout, that doesn't do the trick for this space because it's a small group that benefits. The stock goes up pretty quickly. The market's pretty sophisticated in understanding when there is a winner gets priced quickly, nobody else gets in. Novo is different because it's not just this local 5 to 10 million ounce freak show. It is potentially a 1 billion ounce plus WITS 2.0 story that a junior has pretty much locked up in the Hammersley Basin of the Pilbara Craton in Australia. And the ability to go down dip and drill strat holes, they can't do it for at least 6 months because that's how long it takes to get title to that. So for 6 months, we're going to have this churn in the market. All kinds of people can join the, somewhere between $5 and $10, get a position. In the process, they'll figure out how to measure this. Is that fine, anywhere from 5 to 15 gram per ton gold component real in addition to whatever the 1 to 2 ounce nugget potential? We'll get all that sorted out in the next 6 months, and a lot of people will come in there. And the interesting thing is at $5, it's not cheap. But if people go in there and just buy 1,000 shares of this, and you have tens of thousands of people just do a $5,000 punt on this.
Exactly.
Then you rebuild the faith in the sector.
Exactly.
And if WITS 2.0 delivers and this stock goes to $50 and beyond, then you have that massive generalist interest. You're going to have the institutional money in there, and there's going to be huge interest in discovery exploration. And this show here today has a lot of juniors with the early stage discovery exploration. They are not system rethink type things. They are farther down the food chain, that part of the sector that's waiting to be for the audience to discover. And I think something like Novo delivering on WITS 2.0 can bring in what you're talking about, this huge generalist inflow. And of gold, I'm a pessimist on gold going to the moon, but I'm an optimist on gold grinding steadily higher. And it may get a hit if we get that big market haircut, but that'll be temporary. And sure, all the little juniors will get a temporary hit, but because it's standalone, it's independent of the general market, it has resiliency that would not die in the way all the optionality plays die when we have a macroeconomic downturn and the metal price goes down for the count.
Yeah, I agree. No, and I think we should wrap this up, but you mentioned as a bit of a parallel to Novo, it's still smaller, but the Diamond Rush in Canada, similarly, it brings this energy and excitement and the dream, the realization of a dream aspect to what it is that we do that's done in the exploration sector, right? Like when you discover Diavik, when you discover these exciting new diamond mines in a new region, I mean, people make a lot of money, people get involved, it's really exciting, and that's what the exploration cycle is about, and reigniting interest in that, it'll be a game changer. So if Novo can do that and do it in a fairly short time frame, that the potential there is immense, I think.
Yes, your slave Creighton, Icadi analogy is perfect because that was something totally new for the Canadian juniors. An area the size of Switzerland got staked. Multiple different diamond deposits worth $1 billion plus were discovered. And globally, everybody started exploring for diamonds, and it was no longer just the Russians in Siberia and De Beers, everybody else. Yeah. That was a game-changing discovery, and that really did make a huge difference in the junior space in the early 90s.
Let's hope we're looking at it again.
Yes, except this time it's even bigger.
All right, take care.
Thanks, Gwen.